Commodity TV on the PDAC Mining Conference 2025 here in the beautiful city of Toronto, Canada. And we are now here at the booth of Purepoint Uranium. And with us is President and CEO Chris Frostad. Chris, hi, how are you?
Very good, thank you. Haven't seen each other since London.
Yeah, last time we met a few months ago in London.
A few months ago in London. We just finished a good deal back then, and now we're busy at it.
Yeah, you completed the joint venture with ISO Energy.
We've got 3 projects now that are under joint venture with ISO, and that's what we were closing up, I think, when we saw each other last time.
Yeah.
And which is great. That puts 6 projects we've got under joint venture, which means that we've got some major players footing a lot of the bill. The expensive tab we get for exploring in the north, and it keeping us busy.
So let's start with this joint venture with ISO Energy. I think you brought 2 projects in and ISO 8.
Right,
so 10 in total?
but essentially they were the same. Collectively they were the same size. But what it turned into was quite a massive district. I mean, I don't know if I can even show you, but over here on our map we've got it's pretty much 98,000 to 100,000 hectares in a large district area right on the edge of the basin, right on trend with where all the uranium in Canada comes from.
Okay. So what are your plans for this joint venture in 2025?
Well, we've now that we've completed all of the agreements that are in place, we have gone through the process of putting together a plan for the current year, and everybody's signed off on that. We've got a pretty healthy budget through the year, and we're going to be doing a lot of drilling. So we will start drilling one of those. We've combined them into 3 projects, all of the projects that we put into the bucket. And the first one we will start drilling in the spring. It's called the Dorado project, and it's essentially the entire trend that comes off of ISO's Hurricane deposit, which is the largest grade,
very high grade,
deposit in the world. So that entire area now we've been able to put together into a single package. We spent a lot of time putting a lot of the data together and understanding it on a larger scale, and we've identified 5 different discrete areas that we now want to go into and start drill testing. And these are areas where a lot of previous work was done, but they haven't been tested yet. And we want to start narrowing down where we want to be. So we'll be drilling on that project well into the summer. And then one of the other 2 projects, Celeste, will be drilling in the fall, and same sort of setup there. And then the 3rd project, which is called Aurora, we'll be doing geophysics on that a little later in the year as well. We're getting it ready to do some extensive work as well. So a lot of coming out of that particular joint venture, we've got a lot of work lined up for this year.
How large will this drill program be? So how many meters?
Meters, it's hard to say because it's scattered all over the place, but we'll be doing, it's going to be a few dozen holes. We're doing drill testing such that we're hitting each of these things with 2 or 3, maybe 4 holes, just to get a sense of that first pass look-see. And determine how we start to prioritize things. The budget for the year is about $5 million, and that'll get us well through the year on all of these projects.
So this joint venture is on a 50-50 basis?
It's a 50-50 basis.
Does it mean the costs also 50-50, or how?
That's right. So of the $5 million, we each put up our $2.5 million. As we are the operator on the project, and we're going to be running the project, we earn back from the joint venture a 10% management fee. So that, and essentially between that and our other joint ventures, we're pretty much covering our overheads in any given year. So that's going to help us moving forward. We did a consolidation of our shares late last year to really get our cap table back in check, and we want to make sure that we're not issuing massive amounts of shares now and cranking it right back up again. So between sharing costs with our major partners, between earning back management fees to cover our overhead. And lining up a number of great projects, I think it's going to differentiate us in terms of how we approach the market going forward.
Okay. So you also announced plans for your second joint venture, Smart Lake, with Cameco.
Smart Lake.
What can we expect from this in 2025?
Yeah, Smart Lake is on the west side of the basin. It's close to our Hook Lake project. It's a joint venture with Cameco, as you mentioned. We own 27%. They own the remainder. We did a geophysical survey up there at the end of last year just to refine the target area, and we'll be starting drilling out there in a couple of weeks. We're going to drill 4 holes along that and again, see what comes out of it. It's an area that we haven't drilled out there with them for about a dozen years.
Wow.
And the first program we did out there, we started to hit uranium. But when things got exciting over at Hook Lake and with NextGen and fission, et cetera, the budget and the attention all went over there. So we're really just getting back to this project for the first time in a while, and we're quite anxious to see what it has to show.
Okay. Then you also recently announced results from your Taberner project. So how did they look like?
We have two projects we released geophysics on this year, Taberner and Russell South. These are 100% owned projects. These are projects that are, Taberner in particular is a very large project. It was a project that we put together a few years back. It was actually 3 projects, and through geophysics we've found the target area cutting right across all 3 of them. So we've added to that package. We've picked up more claims, and this will be the 3rd geophysical program we've done, and we're pretty much ready to start drilling. We'll be doing some surface work later in the year, just to again refine the drill targets. There'll be helicopters involved, but we'll be doing that later in the year and getting them ready as well. So it's another large-scale project we have with a lot of prospective targets on it. And like with our other project, we could be looking for partners on that one as well.
Okay. So let's have a look on the uranium market. What are your feelings about the current status?
Well, again, the challenge with the uranium market is we can't really see what the price really is. All right, 60%, and you probably hear this from everybody you talk to. 60% of the trades are done off market, and we don't know what they're being traded at. And so the only real number people have to follow regularly is the spot price, which is a very small market.
Yeah.
I think if there's 6, 7, 8 trades a week, it's been a good week, sort of thing.
Okay.
So it's very low, but it's very volatile. And what we saw happen at the end of 2023 was the spot market took off on very low volumes, but it took off, and the equities kind of chased it. And you could see quite quickly that it was getting overheated, and it would have to correct, because we do have somewhat of a vision on what's going on in the long-term market. And the long-term price just kept ticking up nicely, like we would have hoped it would have, but the spot got way out of hand. And it peaked at over $100, and then it started to correct on the other way down. Equities did the same thing. And so we've got a market where a lot of retail investors are looking at it and figuring we're done. We've had our heyday here, but in fact, I think we're only halfway through the uranium bull market. If you look at the long-term price of uranium, you can see it has been gradually moving up nicely. It's up to about $80 now, which is about the price you need to turn a mine on. And all of the geopolitical aspects around nuclear and around uranium that we've been watching haven't really taken hold yet. Cameco will tell you that they're not seeing the long-term contracting from the utilities in earnest yet. They're waiting for that. So there's a real squeeze going on. We've been producing globally less uranium than we consume for 6 years now, and that gap is widening. And the producers are not, the near producers aren't quite getting to that production stage as quickly as they'd hoped. The demand on the nuclear side is growing, so that gap is widening, and it's a real pressure point. So I think over the next year or two, we're going to see a lot of pressure on availability of uranium.
Yep.
And of course, it will squeeze up the underlying long-term price. In the meantime, yes, we're going to see the spot price being volatile, doing all kinds of backflips and nonsense. And I don't think investors can get distracted by that, because we're not. We saw it get out of hand, and we used that time to really strengthen our base. Get our cap structure in place, get our partners in place, make sure that we've got access to the capital we need to do the work we need to do without diluting the bejesus out of our shareholders.
Sure, yeah.
And I think that's what it's going to take to be successful right now.
Chris, thank you very much for this insight in
Thank
your
you.
plans for this year. All the best for 2025, and we keep all fingers crossed for great results.
That's great.
Thank
Thank
you
you.
very much. Thank you. Yeah, that was Chris Frostad, President and CEO of Purepoint Uranium. You heard it. A lot of news to come from 2 or 3 projects. I would say check out the company, and bye-bye from Toronto.